to the 9th episode of the complete learning series of stock market investing and trading. As always, I've put all these learning videos into a playlist. The playlist is available up here in the I button. Make sure you watch all the videos in the right order. Learn really well. Let's trade together and grow together. So the 9th episode. I hope you've all watched the 8th episode where we practically saw and learned about the trading terminal. Now, as part of that, this is the next video that I'm sure you're all super excited about. Yes, we are going to learn about intraday trading. I'm going into my broker's terminal. I'm going to take an intraday trade, a live trade, and going to demonstrate to you so that you can also learn practically how to do an intraday trade. Right, this is very basic but super important. There are certain specifics and intricacies to placing an intraday order, and that is what we are going to learn today. So, if you have not watched the previous video, I'll make sure I'm giving it in the I button here, because in the previous video is where we learned about all the intricacies about the broker's trading terminal, right? We went to Zerodha and learned where we can go to see what all features. So that is super important. So now if you know how to navigate your Zerodha's application, now in this video, let's learn about intraday trading. So the agenda is very simple. We are going to take a live long intraday trade position, and then we are going to take a short selling intraday position as well. Both of this live demonstration we are going to learn together. Okay, so as I always say, before getting into the video, if by chance if you still not have opened a broker's account, make sure you open an account with Zerodha, because we are using Zerodha to learn everything about investing and trading. The link to open an account is there in the description and the pinned comment. And if you do not know how to open an account, I have done a video for the same as well. So yeah, let's start. Without further ado, let's get right into the video. The name is Sharique Samsudheen. Welcome to Market Feed. Three things before we enter into the episode. Number one, if you actually still do not know how intraday trading works, what are the complexities of intraday trading, how it actually works, you need to watch my video on intraday trading. I'm giving the link to the video here. I've beautifully explained what intraday trading is and how it works. Number two, intraday trading is a trading style with which you can actually make a lot of money. Actually, a lot of money. I personally know a lot of traders who are minting money with intraday trading. Even I am an avid trader. But at the same time, you should also know the fact that intraday trading is a trading style with which you can lose a lot of money as well. So please be careful when you learn about intraday trading and when you practically start doing it as well. Because in this video, I'm going to show a live intraday trade. So I'm sure you also are going to take an intraday trade, and probably you will also put in a lot more capital, lot more money, and start doing intraday trades. So always, as I always say, make sure in the initial days, when you're learning about the skill, when you're practicing, only put in the money that you can afford to lose, and then learn with that money. Once you're absolutely confident about your skill, that is when you have to bring in extra money. Okay? Give me a promise here, and also go to the comment section and mark your attendance for the video. And the third thing which I have to say is something I keep on saying, the point that if you're a trader who have been in the market for quite an amount of time, but if you're still not able to make consistent profits from the market, what are you waiting for? Download Market Feed app right now, where you can get trades, real trades of India's most profitable, amazing traders for free. You can see those trades, you can take those trades all for free. You can also join their live trading sessions and communities if you're interested. You can also learn their secret trading strategies directly from them. Awesome. So if that's the case, then let's get into the video. Let's practically learn about intraday trading. So very simple, two segments in the video. The first segment is how to take an intraday long position. So the first thing is understanding what is an intraday long position. So it's very simple. If you've seen the video which I recommended, you would probably know it. But again, I'll repeat it. A long position is when you buy a stock and later when the stock price increases, you sell it for a profit. You sell it on the same day. That is where it becomes an intraday trade, right? So a long position is nothing but buying first, and when the price increases, you sell it for a profit On the same day, it is an intraday long position. So now you understand that. Now let's go to Zerodha Kite mobile application again, right? In order to take a live intraday long position so that we can learn how to do intraday trading. So just like the last video, I am using the mobile application because I believe a lot of you beginners would be starting off with the mobile application. When you become confident enough or when you have access to a desktop, probably you'll use the web terminal as well. And I'm sure if you learn how to use the mobile application, all of you can easily figure out the web application on yourself. Cool. So let's do this. Now, in my watch list one, I have added two stocks, Tata Motors and SBIN. SBIN is State Bank of India, right? So again, I've added these two stocks just for our learning demonstration purpose. Let's take a long position in Tata Motors, and in the second segment where we learn about how to do short selling, intraday short selling, let's do it on SBIN. All good? Okay, so we are going to take a long intraday position in Tata Motors. So yeah, you add it onto the watch list. You know it already, right? That's why I'm not showing. So Tata Motors, you search and you add it to the watch list. We learned that in the previous video. That's why I said watching the previous video is very important, where we learned everything about the watch list, about orders, portfolio, everything we learned in the last video. Okay, coming back into our agenda today. So Tata Motors is already there. I'm clicking on Tata Motors. So two options, right? I can either buy it or sell it. Now this is a long position which I want to take. So I have to buy first and then sell later. So my square off for this buy position is a sell order. Again, these are terminologies we already learned in this series. I hope you're watching all the videos in the right order. So maybe a lot of the times the actual journey is you go into the chart, you look into the chart, you do some studies and understand if it will go up or down. And when you understand that it will go up, that's when you take a long position. Now let's not go into the studies with which we can understand whether it will go up or not. The studies is basically technical analysis. Going ahead in this learning series, we'll learn technical analysis. Do not worry. Today, we are only going to learn how to place an order, how to place a long order, how to place a short order. Right. So Tata Motors, I'm going, say we have already done the study. We understood that Tata Motors is going to go up. Now, quickly, we have to go and take a intraday buy order. Right? Intraday long order. Cool. So now again, just like the last video, we have 4 order types here, right? Regular order type, cover order type, AMO order type, and iceberg order type. Again, all the different order types we have already learned in the previous video. If you haven't watched, again, I'm giving the I button, the video in the I button here. Make sure you learn about the different order types. So quickly saying about the order types. Iceberg order type, right? I'm going to iceberg order type. One thing you need to know here is iceberg is a complex order type which is mostly used by futures and options traders. We're not going to learn about futures and options here. In today's video or in this part of our learning series, we are learning about equity trading or stock trading. In this video also, we're going to learn about equity intraday trading. So iceberg order is not required now. When it is required, when we learn about futures and options, I'll do a video then. No worries? Cool. Let's move ahead. The next order type is AMO. We learned in the last video, after market order. This is an order that you have to place during the time when the market is closed so that the order will be triggered next day morning when the market opens. This is required now. Here we are going to learn about active intraday trading during the time when the market is open. So AMO order is also not required. If you are placing an intraday order when the market is open, AMO order is also not needed. Then what is left? Regular order is left. Cover order is left. So if you want to do an intraday equity order, you can either use a regular order or use a cover order. Let me tell something upfront. Cover order is not really great now. What you should do is actually go via the regular order route. That is what I'll be demonstrating today. But since we are learning, I'll also explain what a cover order is. Again telling, you need not actually implement cover order. We'll only go with the regular order, but I'll explain you what a cover order is. So if you look here, with all the knowledge that you have from the previous video, you'll easily understand. That is why I keep on saying you have to watch the previous video. So first thing is you have to put in the quantity. So quantity, this is a demonstration video. So for demo purpose, I'll only be trading with one quantity. So if you look here, it's asking for product and product is just intraday. If you go into regular order, you can see product is either intraday or long term also. In the last video where we actually bought a stock and took it in delivery into our demat account, we did a long term order. But here we are doing an intraday trade. So the product has to be intraday. So if you look into cover order, the product is only intraday, which means that a cover order is a pure intraday order type. You can only place an intraday order with a cover order. So yeah, you're putting in a quantity of 1. So as I said, it's a demo, I'm only putting in quantity 1. So a lot of beginners I have seen asking question, where is the switch for getting leverage? Because it's an intraday order, the broker is supposed to give us leverage. Where is that switch to switch on leverage? So let me make things very clear here. Since you are selecting the product as intraday, you are upfront telling the broker this is an intraday order. Because of that, you are automatically getting leverage. So if you look into Tata Motors price, the price is 398. So for buying one quantity of Tata Motors, you should normally or originally need 398 rupees. But since you have taken intraday, come here, look here, see, approximate margin is only 79 rupees, which is 1/5 of the original price of Tata Motors. 1/5 of the 398 is 79.53. Which means that if you select the product as intraday, automatically you will be given leverage. That is, with the original capital you have, you can buy 5 times more of Tata Motors. Understood? So there is no special switch for switching on leverage. If you select the product as intraday, you'll automatically get it. I hope that's clear. So now, you come down, there are 2 types of placing the order. One is a market order, second is a limit order. Again, something that we learned in the previous video. And I hope you all know what a market and a limit order is. So if you actually take a market order, what happens? When you buy the stock is bought at the current market price. So you see here, right, 397.8 is the current market price. So if you go via the order type, which is market, it will be executed at the current market price. Whatever the price someone has to sell in the market, it will be executed. You can normally go via the route, that is okay. But then we have something called as a limit order. We learned this in the last video. So when you go via limit order, you get to type in the price here. See, if you go in via the market order, this is disabled. You cannot fill in the price, which means that at whatever the price is available in the market, the order will go through. If you actually take a limit order, see, then this is enabled. You can actually type in the price. We learned this in the last video. When do we use a limit order? When we have to limit the buying price to a specific price. Say the current price is 397.3. If you put 400 here, right? If you put 400 here, it means that your buying price will be limited to 400. At whatever price below 400 only, it will be bought. It will not be bought above 400 rupees. So now if you give 400 here and if you actually buy the stock, what will happen? This current price is below 400 only. It is at 397.5. So it will be bought at 397.5. It will not be bought above 400. So the actual use case of using a limit order is, say the current price is 397.2. Right, 397.2. So if you give 395 here, what happens? And if you actually send the order, this order will go into your pending order section. The order will be activated only if the stock price moves down to 395. If the stock price moves down to 395, it will be triggered and the order will go through. So the point I'm trying to convey here is, you can use a limit order to buy a stock at a lower price than the current market price. Or you can use a limit order so that your buy price does not cross a specific price. This is the use case of a limit order. Now let's say you place a limit order of 395 and you also put a stop loss trigger. Yes, that is the next feature of a cover order. That is, when you are sending in the order itself, you can, along with it, you can set a stop loss as well. Understood? Which means that you are putting in a limit order. It is and the limit price is 395. The order will go through, and you can also put a stop loss at a price of 390. What happens here? Now you send this order, the order will wait there. Order will wait for the price to come down from 396.7 to 395. At the price of 395, you'll buy a Tata Motors stock. Along with it, a stop loss order of 390 will also get automatically created, which means that from that 395, if the stock price moves up, you'll see profit. If the stock price moves down, you will see loss. Now that is where you have to put in a stop loss order. The stop loss order here is being set at 390. That if the stock price moves down and reaches 390, the stop loss order will get executed and you will be exited from the position with a loss of 5 rupees. Clear? So a cover order is a pure intraday trading product in which you can buy a stock, or in short selling you can sell a stock, along with which you can automatically place a stop loss order. Good, right? As a good intraday trader, you should be placing stop loss with all your orders. So this is what a car order is. But a car order has a lot of practical difficulties, because when you exit a car order, it always has to be a market order exit. There can be something called slippage which happens, which is not actually appreciated by a lot of traders. And there are some practical difficulties when you place a cover order. That is where I said earlier, you have to actually place a regular intraday order, which is the best way of doing intraday trading. And that is where, or that is how I'm going to show you a demo also. So now again, I'm coming into regular order. Quantity is one only. I'm selecting the product to be intraday. See, product has to be intraday and not long term. And again, question, right? Type can either be market. If I select market, I can buy it at the current market price. Then it can be limit order. We learned about limit order, right? If we have to limit the buying price to something, or if we have to buy it at a lower price only, then you can use a limit order. Or else you can, there are two more products here, SL and an SLM order. We already learned in the previous video. So if you actually select an SLM order, what happens? You can buy a stock only if it reaches a higher price level, right? Say, if I'm buying one quantity of Tata Motors, it's an intraday product, I'm selecting SLM, and see the trigger I'm putting, say 400. 400. What is the current market price? 396.4 only. Now the order will wait there. Only when Tata Motors price reaches 400, this order would be triggered. And you will be buying Tata Motors at market price, because it's an SLM order. Stop loss market order. At 400, the order will be triggered, and at the market price, right, it would act as a market order, and at the market price, Tata Motors will be bought. Or else you can use a limit order, where again you are giving the trigger at 400. That is, Tata Motors stock price, when it reaches 400 only, the order will be triggered, and you have to type in a limit price also here, say 402. So the buying price would be limited to 402. Tata Motors wouldn't be bought at a price more than 402. Again, summing things here. When you look into market, limit, and I want you to look into SL and SLM together. So select market order when you want to buy a stock at the current market price. The instantaneous market price you're seeing on the screen. Use a market order. Use market order, right? Use a limit order if you want to buy a stock at a lower price only. Stock is at 400, you want to buy at 395, use a limit order only. Use a SL or an SLM order if you want to buy a stock at a higher price than the current market price. Use a SLM or a SL or a SLM order. Very clear. Now for demonstration purpose, I'll actually place a market order. Now you might ask, hey Sharique, you said that when you are trading intraday, you have to, it's always good to have a target and a stop loss in place. I'll teach you, do not worry. Now you see a down arrow also here, right? I'm clicking on the down arrow. More validity. We learned in the last video, always go with a day validity. And disclosed quantities is what this disk quantity means. Do not look into it, not really necessary. So validity, you can select day. So I'm going to swipe to buy, and then Tata Motors as an intraday order, one quantity at the market price will be bought. What is the market price? 396.6, right? I'm swiping to buy. Tada! Completed. One quantity of Tata Motors has been bought. I'm closing it. I'm going into my orders. I'm looking into my open orders. No orders are open, because the order which I sent in got executed. See, Tata Motors got executed at 396.5. And where do I see it? I see it in my positions tab. See, I'm already sitting on top of 40 paisa profit just for one quantity, you know. So, because Tata Motors price moved up, I bought it at, see, I bought it at 396.55. The current price is 397. So, I'm seeing, see, it even moved up. Now, I'm seeing some 40, 50, 60 paisa profit. I'm seeing. If I would have bought a higher quantity, I would have seen really high profit, right? This is by just deploying 79 rupees, I'm getting so much profit. Good. Now, what is the next thing? I'm seeing profit here, right? And this is an MIS order as it's showing here. What is an MIS order? It's an intraday order. Now, since I'm seeing profit here, I can just click on this, and I can just click on exit, and I can exit this. Booking this profit, I can exit. But before doing that, see, when you see profit, you can exit. When you're seeing some loss also, you can just click on these positions, and you can click on exit, and you can exit. But let me say, before doing that, I want to teach you the right way. I want you all to learn how to place a stop loss and how to place a target also. Now, what is a target and a stop loss? A target is an order that you place so that when the stock price, which is bought at 396.55, I want to keep a target of 400. So when the stock price reaches 400, automatically, without me taking any action, the stock gets exited at 400, thereby locking in that 4.5 rupees profit for me. I can also set a stop loss at 390 rupees, so that if the stock goes down till 390, it automatically gets exited, thereby preventing a large loss for me. So that even if I'm away from my screen, if I'm not looking into the screen, it gets automatically done. I need not worry. So when I enter a position, if I already keep a SL order or a stop loss in place and a target in place, then I need not worry. Maximum I know I'll lose if the stop loss gets triggered. I'll lose so much. If the target gets triggered, I'll get so much. I need not be worried. So it's always good to keep a target and a stop loss in the system. So again, for keeping them, I'm going back into the watch list. I'm clicking on Tata Motors. So what is that I have to do? I have to exit the stock at specific prices, right? So that I have to sell Tata Motors. Okay. Now I'm going to place a stop loss order for this Tata Motors. Okay. One quantity. It is intraday only, and I need to sell the stock when it reaches 400. For that, what order should I use? It is exactly the opposite of buying, right? So there I'll actually go and keep a SLM order, and I'll put a trigger as 390. Okay, and validity is day only, disclosed quantity is 0 only. And see, now it is Tata Motors. It is a sell order. Quantity is 1. Intraday SLM order. 390 is the trigger, and I'm swiping to sell. Okay, I'm closing it. I'm coming into my orders. Look at my open order. See, Tata Motors, it is an SLM order and it would get triggered only when the price reaches 390. If the price reaches 390, tada, it gets executed, and from my positions tab, this Tata Motors will go away. Okay, now let me keep a target also for my buy position. So for that, I'm going to Tata Motors again. I'm clicking on sell again, one quantity, intraday. I'm placing a limit order. Okay, and what is the price? What should be the price of the limit order? My target price. My target price is 400. Right? When Tata Motors reaches 400, that is my target. Let it get executed automatically. So I'm putting in 400, and validity is day, disclosed quantity is 0. Swipe to sell. Okay, I'm closing it. I'm coming into my orders. See, there are 2 open orders here. What is this? The one at 390 is my stop loss. The one at 400 is my target. Now I can go away. I can keep my phone away. I can do whatever I want, because I know, looking into my position, see, I'm already in a profit of 1 rupee. 1 rupee profit I have got, and I have nothing to worry about. The market will be closing in some time. I'll just leave it there. If the target gets hit at 400, I'm making money. If the stop loss gets hit here, I'm losing so much money. Or else you tell, before the market closes, because this is an intraday, auto square off will happen if I do not square off. Correct? Or else, what is the final route? You are seeing at some point, oh, I'm getting 1.3 rupees. This is actually not bad, 1.3 rupees on just 80 rupees deployed. This is a good ROI trade which I've taken here already. Again, just by luck, right? And just one quantity, some random stock I took. Now, if you actually like the profit you're seeing on the screen, you can exit, no? What are you waiting for? You click on it. You click on exit. It's an intraday order. Exit at market only, because you like the price that you are seeing now, because it will be executed in market. So I saw some 1.2, 1.3 rupees profit. No, I'll get that. So I'm swiping to sell. Tada, completed. What happened? See, it is not moving anymore. I logged in a profit of 1 rupee 25 paise by exiting this. So I've exited it from my positions itself, because I liked the PNL I was seeing on the screen. I exited then and there. Then you go back into your orders. Go into your open orders. Oh, see, your target order and your stop loss orders are still there. So now if Tata Motors again move to 400 or moves to 390, these would get executed. So if you actually exit from your positions, make sure you go back into your orders, you click on this and you cancel these orders. See, do you want to cancel this order? Yes. And the next order also, do you want to cancel this order? Yes. I've cancelled the order. Now nothing is there in the system. See, I bought Tata Motors at 396.5, then I sold. See, I bought it at 396.5, then I sold it at 397.8, then I cancel my stop loss and target orders. And I booked a profit of 1.25 rupees. Super clear? Now, I think this is how beginners should learn how to do intraday trading. I've given an actual live demonstration. Very simple, right? Use a regular order, intraday order, and buy it at market if you're okay with whatever price you're seeing. Don't get complicated with a limit order and a stop loss market order. You buy it, right? Then you're seeing it in the positions. Even if you do not set a stop loss and a target order, you just look into your positions. If you're in front of the system, what is to be worried about? If you're in front of the system, look at positions. If you're comfortable with the profit you're seeing, exit it. If you're not comfortable with the loss that you're seeing, exit it. Or else the best way is what I demonstrated now. You can set a target, set an SL also. Super clear? Then let's move ahead. The second segment should be super easy. I won't be explaining anything. Very simple. The second segment of the show or the episode, how to do a short selling intraday trade. So first, let's talk what short selling is. Again, if you haven't watched my video on intraday trading, there I've beautifully explained what short selling is. In simple words, if I say short selling is selling first, expecting that the price will go down, you're selling first and then the stock's price moves down. And when the stock's price moves down, you're seeing profit because you sold first and then you buy it back. So you square off a short selling position by buying it back. So if the price moves down, you make profit. If the price moves up, you will have to exit in loss. So short selling is nothing but you sell first and then you buy later. If you do it in the same day, it's called intraday short selling. Okay, let's see a live demonstration and learn how to do intraday short selling. I'm going to quickly go through it because I have already taken a lot of time and I've explained everything that is about order types. Okay, one thing you have to know is when you're selling, limit order and stop loss orders would act in the opposite way. That's the only logic you need to know. Again, for demonstration purpose, I'm going to do a short selling trade on SBIN. Again, there has to be some logic before doing this. This is demonstration. That is why I'm not doing any studies at all. So SBIN, because it's a short selling trade, I have to sell first. I'm clicking on sell. Only one quantity I'm going to do. I'm going via the regular order route because just we learned that is the best way to do it. So one quantity I'm going to do. It's going to be an intraday order. I'm going to sell it in market only. Validity is going to be day. Disclosed quantity is going to be 0. And I'm going to, and see, price of one SBN is 451 rupees. Since we took an intraday order, the margin or the capital required for this trade is only 90 rupees. Right? Divided by 5 is already happening. So I'm going to swipe to sell. Ta-da! Completed. One quantity of SBIN has been sold. Right? I'm going into my positions tab. See? It has been sold. Let's first go into actually the orders tab. Right? Going into the open orders, nothing there. Obviously, because the order got executed. When I go into the executed tab, I see SBIN, one quantity has been sold at 2:57 p.m. at 451.65. I'm going into my positions tab and seeing, okay, it's a good day. It seems I'm just blindfoldedly taking some trades and I'm seeing profits on the screen. So in this short selling trade, see, quantity is -1 because you have sold it. The average price that I have sold this is 451.65 and now the current price is 451. It has moved down by 65 paise. So I'm seeing a 65 paise profit here, right? It moved down by 55 paise. I'm seeing a profit of 55 paise. If it moves up from 451.65, if it goes to 452, I'll be seeing loss. Now, if I like the profit here, I can just click on this and I click on exit, right? I can click on exit. Market itself, I can exit. I can swipe to buy. Buying a squaring of for a short sell, right? I can exit this. But being an intelligent trader, what should I do? I should set a stop loss and a target for this, right? So for that, I come back into my watch list. I come into SBIN. My stop loss and target, which are my exits for my short sell, have to be buy orders, right? So I'm going into a buy order. First, what do I set? First, I have to set a stop loss order. Now, where do I set my stop loss? Since it's a short selling trade, if the stock price moves up, I'll be in loss. So I have to set a stop loss at a higher price. Now, I bought it at somewhere around 451, right? Let's say, no logic here. I'm just taking an example. I'm going to set a stop loss at 455. If it moves up till 455, exit the trade automatically. I'll book so much loss. I don't want any much loss. So I'm going to set that. So quantity is one only. Product is intraday. Type is going to be, you can pause and tell. Type is going to be what? It has to be a stop loss market order. Right? It has to be a stop loss market order and the trigger can be 455. Okay? And nothing to do with validity and disclosed quantity. I'm swiping to buy. Ta-da! The order is placed. I can go into orders. I can go into an open order. Yes. That is my stop loss set at 455. Now I go back into SBI and again I'll buy it. I have to set a target. It has to move down. I have to exit at a lower price for my target to be executed, right? So one quantity, intraday only. What order type will I select? I'll go with a limit order. What price will I keep? Example, let's take some for 445. Okay, validity is day only. Disclosed quantity is 0 only. Swipe to buy. Ta-da! That is also placed. I can go into orders, open orders. If you see, two orders are here. The 455 trigger is my stop loss for my short selling position. This 445 is a target for my short selling position. All clear? You can either wait for these to get triggered, or if you're actually happy with the profit that you're seeing on the screen, again, a very, very good lucky day for me. Without doing any studies, I took a long trade in profit. I took a short selling trade in profit. So if you're happy with the profit you're seeing here, you can click here. You can click on exit and intraday market order. You can just swipe to buy and tada, done. Right? The profit is logged. So I sold it for some 451 point something. I exited it. I bought it back. I squared it off. Those are the terms, right? For 450.5 or something. And I made a 1.1 rupee profit there. Overall, from my 2 trades, I've made 2.35 rupees. What is the capital deployed? Under 100 rupees. What is the ROI already? More than 2 or even 3%. 3% ROI. Super fluke. Don't go by this. You have to actually do big studies before taking intraday orders. Did I forget something? Yes, right. I have to go back into my orders. I have to cancel my open orders. Open target and open stop loss orders I have to cancel. Only then your trading is done. Cancel. Tada. Done. Looks good, no? I feel happy. I thought I'm just doing a demo. I'll just buy some random stock. I'll buy something. I'll sell something and made some profit. So a lucky day, I'd say. This is it. The video is done. I hope things are super clear now. Now you can actually see this video. You can try replicating the same in your broker's terminal. Again, let me say, add only minimum capital. Do with 1, 2, 3, 5, 10 quantities multiple times unless you get used to the order types, entering, exiting, cancelling the open orders. You have to get into the system, right? That's super important. Understanding the world, navigating the broker's terminal, that is very important. That is where practice is needed. And when you're practicing, make sure that you're only deploying very less capital. Then nothing is going to stop you. If you really want to become a good trader, learning how to navigate a broker's terminal is very important. That is what I want all of you to know. Do. You have a Zerodha account ready, put in some amount, take multiple trades. Maybe you'll make some 1-2 rupees in a trade. You'll lose some 2-3 rupees in a trade. Don't worry. Unless you get super used to the platform and super used to all the trading types, order types, once that is in your head entirely, then by that time we'll start learning technical analysis, price action, trading strategies. We can all become great traders, right? So that's it from my side in today's video. If you like the video, make sure that you like this video, share it with maximum of your friends and family and invite them to join. What is this? Is this just a learning community? No, this is going to be India's largest and the best stock market enthusiast community. Welcome all of them and always go into the comment section, ask your doubts. I'll give you answers. My team will give you answers. Others will give you answers. That's the culture that we have here, right? So anyways, that is it from my side in this video. As I always say, let's learn, trade, invest and grow together. See you in the next episode. Bye-bye.